Welcome back. You're watching The Money Show and we are answering your portfolio queries. Let's take Mr. Biral's question. Again, he's 47 years old, 2 CR in 15 years. And he's got a very interesting mix, small cap, SBI, Invesco India, mid cap, Motilal Oswal mid cap, Edelweiss mid cap, flexi cap, HDFC, multi-asset in ICICI Pru. Multi-asset fund of ICICI Pru is the oldest, right, sir, if I'm not wrong. He also has a multi-cap from Kotak. But then, yeah, talking first about the multi-asset, I mean, they were the first to discover a multi-asset category itself, right?
Yes, exactly. It was the pioneer in this category. And the name was different earlier when it was launched. It was ICICI Prudential Dynamic Fund. And later they changed it to multi-asset allocation. This name was changed, but fund is same. And yes, it has performed well, has a consistent performer in this category. But in this category, Kavita, I would like to mention that there are two types of funds. One, where they maintain equity allocation between 35% to 65%. And there are funds which maintain allocation more than 65% in equity. So this ICICI Prudential multi-asset fund maintains equity allocation always more than 65%. So it is basically it has higher allocation equity. So investors who want higher allocation equity should go with this fund. Otherwise, if somebody wants the lesser allocation equity, more in gold, more in debt, so there are different funds with the name in the same category.
All right, exactly. The MAF category, which is what we call it, is quite gaining momentum. And even in the AMFI data, as we can see, you know, the interest towards hybrid, the inflows towards hybrid and flexi cap is definitely, reaching a new high every month. So that shows an understanding of an investor towards diversification. That's a great step that we can see in the numbers as well. But then, yeah, let's get back to Biral's answer, sir. What would you recommend?
See, he has two small cap funds, two mid cap funds, one flexi cap, one multi cap, and one multi asset allocation. So portfolio is a little aggressive. Again, the schemes are good, but if he wants to reduce aggression of the portfolio, in that case, my suggestion that he should reduce his exposure to SB small cap fund, where he has SIP of 5,000, he can reduce it to 3,000, and 2,000 what he will save from this scheme can be allocated to SDFC Flexi Cap and ICICI Prudential Multi-Asset Fund, 1,000 each. So in that case, means he can rebalance his portfolio. Schemes are good, only allocation-wise, as I suggested, to reduce the aggression of the portfolio, that can be done. Second thing, the target. He wants to accumulate 2 crore in 15 years. Though again, inflation, he has to keep in mind that he should factor in. But if we calculate with 7,04,000 what he's accumulated by now, 27,000 rupees per month SIP at 12% compounded annual growth rate, he can expect around 1 crore 69 lakh rupees in 15 years. And if he steps up by 10% every year with 10% step up, he can expect 2 crore 66 lakh in 15 years. So my suggestion that at least 10% step up, he should definitely consider. And as we discussed in the beginning itself, whenever you have money, please keep adding to your portfolio so that you will be able to beat inflation in long term.
This adding money, you know, that's a trick that investors think it's a trick. It's not actually a trick. Just keep adding money whenever you can. But then they often try to time the market, you know. They think this is the right day to increase their SIP amount. Should that be done? How can you actually distribute your SIPs also very smartly throughout the month if you have a lot of them, and also do a step up SIP whenever you are seeing there is a dip in the market, but then do not wait for that dip, because keep waiting for that dip can be a long time for you.
No, whenever you have money, you should top up. Do not wait, because it's difficult to time the market.
Absolutely.
So SIP is meant for that, so that you get benefit of rupee cost averaging. So just follow discipline. Whatever every month you feel that comfortably you can invest, that much SIP should keep. More than that, whenever you have money available with you, whenever you can increase it, you should do it. But at least whatever you feel as per means your cash flow, you can save every month. You should start SIP. And as I always say, not only today, that 7 to 10% step up is quite possible for everybody. More than that, whenever your salary increases, whenever you have higher growth in the business, you should try to increase your SIP as well. And whenever you have money, bonus comes or any lump sum money is available, any maturity of any scheme, that time you should definitely.
Important, for investors, especially for who are in for the long haul, and you have tied your particular fund to a financial goal. Just make sure that you keep investing money, and not also get tense with market movements, and especially the downturns that we see in the market. That's a time, I'm sure even you must be getting those cranky client calls, where they want to book in their profit and just move out of the market, asking you questions that now what will happen. How do you talk to your clients and other people who engage with you?
I agree with you, Kavita. Actually, in a bull market, uh, advisors are not required. So experts, advisors, or mutual fund distributors are more required when markets are not performing as per investors' expectation. And here, the importance of asset allocation, diversification, that matters, because we know that whether we talk about sectors or asset classes or market caps, there are cycles. So sometime one sector performs, sometime other sector performs. Sometime, as we see in last 1 year, gold has outperformed other asset classes, but does not mean that gold will always give you better returns than equity. And that is why awareness, guidance, education, that is very, very important. So professionals play that role for the investors.
All right, interesting. Let's move on and let's take Anand's question now. Um, Tata Small Cap, Bandhan Small Cap, Nippon India Small Cap, Axis Nifty Small Cap 50 Index. JM Flexi Cap, HDFC Multi Cap, Edelweiss Mid Cap, Motilal Oswal Large and Mid Cap, SBI Contra, ICICI Pro Large Cap Fund, and ICICI Prudential Nifty 200 Momentum Fund. He's got 11 schemes. It's too heavily diversified. Where to exit from and why?
Kavita, definitely he should consider reducing the number of funds in his portfolio. And second thing, he should also set his financial goals. Then he knows that how much he wants to accumulate and what is the investment horizon. So that will be helpful. But here, like he has four small cap, no, sorry, one small cap fund in active category, one is in passive category, as well as he has mid cap. Everything means 11 schemes. So my suggestion that I will tell him, yeah, he has four small cap fund, Bandhan, Tata, Nippon, Axis. Yeah, so my suggestion that he should reduce number of funds. So my suggestion, Bandhan small cap fund 5,000 rupees, Axis Nifty small cap 50 index fund 2,500, Edelweiss mid cap fund 7,500, ICICI Prudential large cap fund 7,500, Motilal Oswal large and mid cap fund 10,000, and SBI Contra fund 5,000. So here 37,500 rupees, what he has divided among 11 scheme, I have reduced number of funds, and total 37,500 has been divided into these 7 funds. So that will be a better strategy. I feel that he will follow it.
All right, yeah, that is what we even expect. And what should be the advice to not to further diversify and add any new fund in the portfolio? So I think that is also very important, looking at what he's already done.
But that's why only means I have done so much work on this. I think that out of 11, 7 are also more than required. But yes, because he already has 11, I do not want to disappoint him. So at least from 11, I have brought it to 7. And now the diversification, if you see across that large cap, mid cap, small cap, and style wise also contrast there, growth funds are there, and active and passive, everything. So now if he wants to increase even from 37,500 to a higher amount, he should try to top up these schemes only. There is no scope right now of adding here. But yes, if he wants to add like gold fund to his portfolio or something, that can be considered.
And what about staying away
Gold or
from?
silver, something.
All right. And what about staying away from more passive experiment? Or you think that so far whatever he's tried is right?
This much is enough. I think that he has one small cap, one large cap, and one active small cap and one passive small cap.
Yeah.
That itself is enough. I do not. I don't want that he should add more passive funds. I think we have good fund managers who are trying to beat the performance of index. So you should stay invested for long term in active funds. There is a lot of scope of performing better than passive funds.
And now if he wants to step up his money, because he's not given us any details, he's just given us the fund's name, which is why I'm asking a lot of questions on his behalf. If he wants to step up his SIP amount, that should be in those 7 funds that you've recommended.
Exactly, Kavita, that's a very standard answer from me.
Right.
Every investor should always consider step up. 7 to 10% seems very quite achievable.
Yeah.
So at least 7 to 10%, whatever target he has, but we know that inflation will stay there. So that is why Anand should also try to keep means 7 to 10% step up in his portfolio.
Absolutely, and keep looking at your fund performance once in 6 months. Maybe you just want to take a review of what the performance is. You can look at it as compared to the benchmark. You can also see what the fund managers are doing in terms of strategy. What are they changing? What are they buying or exiting? You know, just dive deeper. Just dive deeper in the fund philosophy and the fund concentration, portfolio exposure, so that you get a sense of what's being done by the fund manager. That's not only for Anand, but for all the viewers and investors who are investing in any mutual fund. Always look at the fund's portfolio, the strategy, you know, the kind of calls the fund manager is taking, and what's the kind of theme that they're working around, expected sectors to play well in the market. So these are basic things that you should be learning once you started investing. I mean, yes, definitely watch the money show, but then beyond that, start doing your homework as well. Now, having said that, reviewing your portfolio, Pankaj, is a very important aspect of your entire financial planning. You say that you want to stay invested in these funds for 15 years, but you don't actually mean that. Why? Because the performance will vary. Okay, today's hero can be a zero of tomorrow as well, you know, and so on and so forth. So how can you take that call, and how can you review the portfolio rightly?
Kavita, fully agree with you. When investors say that they will stay for 20 years, 15 years, but the history says that the average lifespan is 2 years. So generally, investors keep changing their schemes. I'll not suggest that you should change frequently, but yes, every 6 months you should review your portfolio. So does not mean that every 6 months you should change, but at least once in a year you may need to rebalance your portfolio because of certain reason. One is that because of performance of a particular asset class or particular market cap. And in addition to this, as Kavita, you were mentioning, sometimes fund managers who are managing those funds, they change. They switch from one AMC to another AMC. So if you are taking a bet on one fund manager who has moved to another AMC, and now the new fund manager is not able to do justification with the fund, maybe it's a time to take a call on that.
I think with that, it's a wrap on the show. Thank you so much for taking time out and helping our viewers with their financial portfolio queries, Pankaj sir. And with that, for the viewers, I'm going to leave you with our WhatsApp number and our email ID, where you can send across all your questions, learn everything about your investment strategies, your exit and entry plan in a mutual fund, insurance, credit card loan, anything about personal finance you want guidance for from our experts. Do send across your questions on our WhatsApp number, email ID. Thank you so much for watching. Goodbye.